stack sats in an homage to Matt Odell and all of the Bitcoiners who have known for the past decade that if you're going to arrive early to a revolutionary technology that's and the first digital commodity that's monetized in the history of the world, you're going to be in for a bumpy ride. So Bitcoin has been a continually bumpy ride for the past, many years. I think even since we got into the market, it's gone through nearly three cycles. And the only rational way to approach this is dollar cost averaging. So MicroStrategy is in essence just dollar cost averaging into Bitcoin. Our strategy is we acquire Bitcoin, we hold Bitcoin, and we just happen to believe that 100 years from now, Bitcoin is like Manhattan, and you're just going to want to hold as many blocks of Bitcoin as you can. If we just kept buying gold, it's just going nowhere one way or the other. So I I think that what you're seeing is MicroStrategy just dollar cost averaging as a public company, and you'll continue to see us do it because we generate cash flows and we're profitable, and this is by far the most rational thing we can do. Yeah, well, when I think about the way that the price changes, I think there's the demand side and there's the supply side. So if I was building a model, it would be a multi-dimensional, multivariate, nonlinear dynamic model. It wouldn't be a single variable linear model. It wouldn't even be a single variable dynamic model. So I think it's indisputable that the halvings have an impact. That is, when you cut the block rewards in half every 4 years, that has a positive impact on the price because that cuts the supply that's being sold in the open market by the miners or the supply that's out there. So I think that's one element. But my model for the price of Bitcoin is it's a function of adoption and it's a function of technology utility and it's a function of inflation. When you go from 100 million to 500 million people using it, adoption increases. And adoption increases because of awareness. It's spreading over time. It increases because of crisis. For example, the Russian sanctions and the war in Ukraine, that drove adoption, macroeconomic crisis. COVID drove adoption. MicroStrategy never would have bought any Bitcoin if it were not for COVID and the lockdowns. So lockdowns drive adoption, pandemic drives adoption, war drives adoption, inflation drives adoption. A lot of the early Bitcoiners, they bought Bitcoin because of the hyperinflation in Argentina. Now, so if you didn't live in Argentina, you didn't get struck by that, but all of those macroeconomic crises drive adoption. But so there's good adoption. Technology is easy. Netflix is fun. I like watching it on my iPad. That's the good, easy, fun adoption. And then there's the painful adoption. Like in Zimbabwe, the currency's collapsed, right? The stuff you use to heat your home, move your car, and avoid starving to death. If you don't want to starve or freeze to death, those things are 35% more expensive,
Yeah.
40% more expensive in dollars. So if your food and energy are going up in dollars, and if dollars are getting more expensive in your local currencies, by the time you add that, you realize you've got serious, painful inflation. And that inflation, that drives adoption, that drives the price up. And of course, that creates it creates the instigation. You could almost say the first order driver of price is inflation. If the currency it gets cut in half, the price doubles in Bitcoin. The second order driver of price is adoption because people get afraid of inflation. And so they start looking for a store of value. And then FASB accounting is the same way. If I have $1 billion worth of Apple stock at the end of the quarter, I show it as $1 billion. But if I have $1 billion of Bitcoin at the end of the quarter, I might show it as $200 million. Okay, so the rules haven't caught up. So accounting is negative for Bitcoin versus equity, and tax rules are negative. And then there's it's not clear what's the process by which you can establish yourself as a digital commodity versus a digital security. That's not clear. And then how do I prove that my stable coin is safe, right? What's the difference between Circle and Tether and UST? And is there one that's endorsed, by the banking regulator so that a big corporation can hold 1 billion? Like right now, Apple, Amazon, and Microsoft would not buy billions of dollars of stable coin. I think the catalyst for institutional adoptions are there's a short list of them. One of them is FASB accounting. There's this project to review accounting for digital assets on a balance sheet, and that's been formalized. And I think we expect something next year, in the year 2023. It could be early next year if we're fortunate. But a lot of CFOs and a lot of CEOs are watching that. That has an impact on the way you report your P and L and your balance sheet. I think another interesting milestone is the availability of a spot ETF. And a big milestone that we should keep our eyes on is what happens with regard to the Grayscale, the GBTC application to become a spot ETF, because there's a deadline coming up in July. So I think that that will help with institutional adoption. I think that the third thing is we're waiting on some joint guidance from CFTC and SEC regarding digital assets. I think institutions are very sensitive to that. I think the fourth thing is we're starting to see more banks get involved in custody. I think by the end of the year, we'll see some large banks that allow you to custody your digital assets like Bitcoin with them. And I think big institutions, they're very slow moving on their accounting and on their relationships. Like a company might keep the same bank for 30 years, like very slow moving. So if your existing bank that you've used for 30 years says, here's a stable coin that you can use and we can custody Bitcoin, then that's a decision that can be made quickly and in size. First of all, MicroStrategy is a publicly traded company, and we have a public disclosed strategy, which is we acquire Bitcoin, we hold Bitcoin, and it's a long-term strategy. And it's very important for us to be transparent and committed to our strategy. If I told you that our strategy was we acquire real estate in London, commercial office buildings in London, and we hold them forever, and you were an investor of mine, and you wanted to have 5% of your portfolio invested in London real estate, then you would want me to stick to that strategy. And if you ever saw in an interview that I said, I like London, but I'm also buying, vacation villas in Ibiza, and I'm buying container ships in Brazil, you would think, "Oh, I can't trust that company. I don't know. I don't want to own container ships in Brazil." It doesn't matter whether you made money or lost money. You need to be true to your strategy and committed if you're a public company, and the public markets reward you for integrity.